Nasdaq 100 Composite. Today's date is 7/8 of 2012. It's 12:05 p.m. Pacific Standard Time. Earnings season starts Monday, 7/9 of 2012. Yes, it does. It'll be the first light week, and then we'll have all the tech names, software, all the various sector indices reporting earnings. We know that the quarter is going to be not good, and that during this time of the year, in the month of July, in this particular quarter, internet stocks, software stocks, semiconductors, technology is going to have a slowdown. And that you have the worldwide bankers doing everything in the world that they can do to massively come together. And the reason why the bottom didn't continue to sell all the way down, and this was the calendar 2012 pump and dump. We shorted the high of this Nasdaq 100 up here, and it got mutilated on the year. They're right back here. This is that counter rally that we went long on. The 10-week is declining. The 20-week narrow range. We're going to see what happens in the earnings season and where this Nasdaq 100 will break down. If it breaks down, it's had a great trading range for both the call and the put side now. So what we're going to do is say that currently going into the earnings season, unlike the other composites, the Nasdaq Composite and Nasdaq 100 are tied together. This particular index will have all the heavy beta hitters in it. And let me tell you, with fear factors at all-time lows, listen, it wouldn't matter if you get QE3 or not. You're still, is the market going to be able to discount the earnings? If you're going to get QE3 with slower growth in play around the world now, and all this volatility, is that a lot of people don't feel that QE3 is going to do any good. How will the market be able to discount those bad earnings, and what kind of volatility are they going to use? Are they going to take the bad news and try to pop the bad earnings and then sell it? Or are they simply going to punish it and mark them down during the quarter as they should? Because I will tell you right now that the 50-week moving average, we got a lot. The wall of resistance is on us now during the little summer rally that we've had. And the problem is that the narrow ranges are not blowing through there. They're narrow range price diminishing at these 3-week area. And I can tell you right now that we'll be looking at the complete put to call structure. We will be looking at the weekly. The Nasdaq Composite did get a good pull back to 26.12. They got it up there. We shorted it at 26.50. So we're going to use this 26.25 weekly. We'll take a look at the 2600 below it. We'll throw in, and this is all weekly now, and they trade differently, and we'll take a look all the way down to 25.50. But on the flip side, we'll go back up there toward that wall of resistance. This is that 26.50 call, or 26.50 call up and out of the money. Here's that 26.25 call, and here is a 2600 call, and deep in the money, 25.75 call. Now that I've done those and put these in here, we're going to go through these. I am going to go to a monthly structure, and what I'm going to do in the monthly MMT is I'm going to go right back over here, and I'm going to benchmark this wonderful trade that we did. We own that one. That's the 26.50 put on the Nasdaq 100, and they pay a lot. Here's the 26.25. Here is a 26.10 put. It's all monthly. Here is that 2600 put. That is buyable. Boy, they really marked this side of the market down during that volatility out of the ECB and Germany. There's a 26.50 call up and out of the money. Here's the current monthly, and these are all monthly, 26.25 call. We'll be watching the 2600 call that's in the money. Remember that the Nasdaq Composite closed at 26.12 right here, down 35 handles, and that was a good little correction. Long overdue. They're going to have to deal with the earnings side. So basically, I will put up and out of the money would be the 26.75 call up and out of the money. Now, notice that I've got the weeklies right here, and we're going to go through them. We'll set alarms. We'll trade these indexes. Boy, do they pay money. And you can see some of the price ranges from the lows and the highs and the historical volume, but here's the total volume that was traded. They were really buying up and out of the money some calls. They were buying the 2650 call. They got taken to the woodshed. They were buying the, as far as volume goes, they were buying up and out of the money on Friday because that's what they were doing. Now, let me move this out of the way. Page save. Back to the Nasdaq 100 chart. We'll do those things. We had a correction. 10-week is declining. And it's a bearish time of the year for the earnings in these certain sectors. Now, whether the market wants to try to discount it based on do we get QE3 and everybody has to accept lower growth and be good with that? No. And less people going back to work? No. That's not growing an economy? No. The bull, bear, the manipulation, volatility on Wall Street, and all of the little gimmicks and everything that they apply, if you're an individual investor and you don't know what you're doing, it's time for you to sell. And it's time for you to sit on the sideline and let the earnings come out, watch and see if they mark it down or not based on lower growth. There will be a lot of pain, and the CEOs are going to be given their analysis during those conference calls. I don't see any of them that have a reason to be bullish, nor do I see anything getting done in Congress, because I don't. Not during the election part of the year. Now, we have a very high level of resistance going into the earnings. Can the market discount it? Some will be discounted, some will not. What I am going to tell you is that at the current rate, this whole little rally that we're supposed to have every year, supposed to have a summer rally every year, just like you do a fall rally. But I will tell you right now that going into tech earnings, those earnings are going to be soft. What the market will try to do, they're not as bad as anticipated. We don't care if they want to take it higher or not. What we are saying is the market is very vulnerable and could easily go lower and break all the way back down to these lows to 2,300 during the summer period. It is possible. Ben Bernanke will be speaking on July 16th and 17th. We've got a monthly expiration. We got Google kicking off the earnings. JP Morgan's going to be in there. There'll be some other stocks. Alcoa will kick it off tomorrow. Everybody knows that commodities and slow growth is in play. We'll be looking at transports. We'll be looking at various things. We'll be looking at where to pick off the opportunities on the buy side, sell the short side of the market, take advantage of whatever the market's willing to give. However, for the people that are having hard times with markets, this would not be the time I would want to be holding a lot of stocks going into the earnings. Whether they want to try to pop them higher and then sell them or pop them lower to buy them. And I would be looking for the markdown, and I would pick the good quality names to go long. That's exactly what we'll be doing here. Bearish resistance on Nasdaq 100, earnings season, Nasdaq 100, heavily technology orientated. High beta stocks like Priceline, Amazon, Google, Apple are all keyed in here. And Apple's 18% weighting of the Nasdaq 100. Let that be known. But you still have the weekly crossover. It hasn't stopped. It's still pointing down. Your narrow range weekly right here. We'll see how the markets open up. If we gap down and go below that 10-week, and we have heavier on-balance volume, because the whole upside move was done on extremely lower on-balance volume. In some cases, we had on-balance volume so low you have to go back 10 years ago. We like it when markets are being bought on heavy volume and going up on higher volume. We like to see the buyer committed. Once again, we will have the long side. We will have the put side, the long side. We will trade the volatility using everything and every ammunition tool based on wholesale prices and calls and puts on Nasdaq 100. Get ready to rumble MMT.